Hey everyone, how's it going? It's Friday after the close. So last time I checked in with you was on Tuesday morning, and Apple was trading 332, and the highest open interest on the calls was 350. I think it was a little higher. I think it was up to the 40,000 range or a little under. Those pretty much stayed the same, so expire under that, and they did. This, as you can see, changed a little bit. At Tuesday morning, it was the 330s was the highest, but it was 332, so all those people were buying those 320 puts, so that's how that creeped up there. Um, so it changed a little bit, but they still expired it above it. And then you come down here where let me get on this, where it expired at the 335.22, we'll call it. And so got rid of all this and got rid of from right there on. So I mean it's a lot of dough to not have to pay out for your insurance. This 340, and this is why I don't use exact MaxPain. Apple's I use this open interest method, and it is highly accurate, way more than an exact. And it's going to be way too hard. A $350 stock, $5 is going to make or break. You're going to say it's not true or it's not valid because that's 1.4%, whatever. I'm not trying to, like I said in the other videos, 335, I think I even said 335, 343, whatever is fine, and 335, there it is. It's not going to matter. The thing is, these big, you want to get rid of these big numbers. There's no precise 340. No, it's not going to matter. It's in this range. And then, so this 340 though, it's not what it seems, because you have a ton, why isn't this working? You have a ton up here, that, they were going to close up, or they closed up today. They're not going to just leave those out there. So this, if there's one more day, these would have closed way down, this open interest. And then same thing with those 335s. I bet, if I'm going to tell you that on that, I got to tell you the truth here. So these 335s, they were probably way down here. Also, so overall, they probably just got rid of the 330s and on. Still, it's a good amount of dough. Yeah, so that's that. I'm gonna keep I'll make a section for trading, because I just want to give you the data here, educate people. I don't want to come off bias and all that and do this or do that. So I'll make a separate trading type thing. This is going to be just more for education and the data. 2 weeks ago I said I thought May 23rd we would start to run up, because, and I just complete brain fade. I was looking at this and I didn't see any weeklies. I just saw that May monthly. I think we were on a weekly. The May monthly was next. Said it wasn't going to go above 350 or below 330, and what do you know? And then I just didn't even, this whole object is because these weeklies are keeping this down, week after week, and I can't believe that I faded that one. But so the Junes, we'll go back to this June. So the Junes still look good. We're getting way up here at 370. You even got your 380. So I mean that's looking good, and you have more puts overall than calls. So I mean it looks like a good recipe. The only thing though, because look what you're gonna have. It's gonna come back to 350s are gonna start to creep back up. But I mean this is really not enough data, because these just started trading on Thursday. But for sake of argument, like that's quite a bit right there. That's 4,000 just yesterday that got traded on the put side. I haven't really looked into this too much, but that actually might be good. I was just saying, whenever you have a high amount of puts versus the calls, that's a complete recipe for a move higher. Okay, I'm just going to think this through with you guys here. Anyways, but so you have the 345s right here, and that's what sucks is it just keeps coming against this wall. So you had the 340s, 10,000 trade today, so it's just going to keep hitting this wall. It's got to break through it. I'll come back on Monday when we get a better open interest, Monday after the close or something, let you know more. But just say, for example, just for educational purposes, say this is only 1,500. Um, say this was Tuesday, and this is the data we have. We have the 345s right here at 1,900 contracts, and then we have the 335s at 4,000 and the 330s. This is where everyone gets wrong. Like, oh, stocks go to they flow to the strike with the most open interest. Like I always hear it on CNBC. All these people, it flows. No. It flows away from. Every single time. I have no idea where these guys are just getting this information. So if you have 4,000, just the puts are way overpowering the calls. So that's a perfect recipe for Apple to go right up here because big deal. They're gonna toss away 1,900 contracts and put away almost 10,000 if they expire Apple way out here. So that's that's what you want to look for. I don't know where these people get it wants to go to the highest open interest. No, the name of the game, it wants to go away. It wants to go away from this. Wants to go away from this. But what's the better risk reward? It's on this side, and that's where I come in different on the MaxPain. I'm just using it kind of as a general term. Whatever causes the most pain, however you have to do it. In this case, it would be bust right through the calls and get away from the puts. And that, that's going to give the MaxPain to the option holders. I think that's about it for right now. I'll do another video, and I'm going to try and post get some written word going, and get some conversation going that way. So until next time.